The world of finance is often portrayed as a realm of order and calculation, governed by regulations, institutions, and markets. However, beneath this veneer of stability lies a history marred by financial crimes, scams, and heists that have not only caused immense financial damage, but also shaken public trust in the very systems that underpin the global economy. From high-profile corporate scandals to audacious heists, these events have left deep scars on both individual investors and entire nations. In this exploration, we will delve into some of the biggest financial scandals, notorious heists, the world of tax havens, and the fascinating world of Ponzi schemes, unraveling the complexity of fraud and deception in finance. History's biggest financial scandals. Financial scandals are among the most destructive events in the world of business and investment, often leading to widespread consequences for investors, employees, and the public at large. Some of the most infamous cases in history have highlighted the risks of unchecked corporate power, the dangers of greed, and the flaws in regulatory systems designed to maintain financial order. Here are three of the most significant scandals that rocked the financial world. Enron, the collapse of an energy giant. Enron, once considered one of America's most innovative companies, became synonymous with corporate fraud and accounting scandals. Founded in 1985, the Houston-based energy company quickly grew to become one of the largest corporations in the U.S., with interests spanning energy trading, utilities, and even broadband services. Enron's rise was fueled by a reputation for bold innovation and an aggressive business model that promised massive returns. However, behind the company's impressive facade was a web of deception. Enron used complex accounting tricks, such as off-balance sheet entities, to hide massive debts and inflate profits. These practices were executed with the help of accounting firm Arthur Andersen, which was complicit in certifying Enron's fraudulent financial statements. When the truth came to light in 2001, it led to one of the largest corporate bankruptcies in history, with Enron filing for bankruptcy in December 2001. Thousands of employees lost their jobs and pensions, while investors saw their savings wiped out. The scandal not only led to the downfall of Enron, but also contributed to the dissolution of Arthur Andersen, one of the Big Five accounting firms at the time. The scandal shook public trust in the corporate world and led to the passage of the Sarbanes-Oxley Act in 2002, which aimed to increase corporate accountability and prevent similar frauds. Bernie Madoff's Ponzi scheme, the largest fraud in history. The case of Bernie Madoff, once a respected financier and former chairman of the Nasdaq Stock Exchange, represents one of the most notorious Ponzi schemes in history. For decades, Madoff operated a massive investment fraud, attracting clients with promises of high and steady returns. His firm, Bernard L. Madoff Investment Securities LLC, claimed to use a unique investment strategy that generated consistent profits regardless of market conditions. In reality, Madoff was running a classic Ponzi scheme. He used the money from new investors to pay returns to earlier investors, rather than generating legitimate profits through investments. As long as the firm was able to attract new money, the scheme could continue. However, when the 2008 financial crisis triggered a wave of redemptions from investors, Madoff was unable to keep up the charade. In December 2008, he was arrested, and it was revealed that he had defrauded investors of an estimated $65 billion, making it the largest Ponzi scheme in history. Madoff's scheme devastated thousands of individuals, charities, and institutions, many of whom had invested their life savings or pension funds in his fraudulent operation. Madoff was sentenced to 150 years in prison, and the scandal once again exposed the vulnerabilities of the financial system, particularly when it came to the regulation of investment schemes. The Volkswagen emissions scandal, deceit in the auto industry. The Volkswagen emissions scandal, often referred to as Dieselgate, was a corporate scandal that involved the German automotive giant Volkswagen VW cheating on emissions tests for its diesel-powered vehicles. In 2015, the U.S. Environmental Protection Agency, EPA, discovered that VW had installed software in its cars that could detect when the vehicle was undergoing emissions testing. The software would then reduce the car's emissions to pass the test, But in normal driving conditions, the emissions would exceed legal limits by up to 40 times. The scandal affected approximately 11 million cars worldwide, leading to billions of dollars in fines, lawsuits, and recall costs. It tarnished the reputation of one of the world's most respected automobile manufacturers and led to the resignation of several top executives. In addition to the financial penalties, Volkswagen faced severe public backlash and a loss of consumer trust. The scandal also raised questions about corporate governance, environmental responsibility, and the role of regulatory agencies in preventing such deceptive practices. The world's most notorious heists. While scams and financial fraud often involve deceptive practices within established institutions, heists are typically characterized by direct theft, often involving elaborate planning, daring execution, and significant risk. Some of the most famous heists in history have gone down as thrilling examples of criminal ingenuity, though the financial impact of these crimes has been profound. The Great Train Robbery, 1963. One of the most famous robberies in history, the Great Train Robbery, took place in the early morning hours of August 8, 1963, when a gang of 15 robbers managed to steal $2.6 million, equivalent to approximately $50 million today, from a Royal Mail train traveling between Glasgow and London. The robbers, led by mastermind Bruce Reynolds, had carefully planned the heist, learning the route and timing of the train, and even tampering with signals to stop it in a remote location. The robbers used a fake signal to stop the train and then overpowered the crew, unloading the money from the train's cargo containers. The gang had thought of everything, from disguises to getaway vehicles, and managed to escape without a trace for several weeks. However, in the end, most of the robbers were caught, and the stolen money was never fully recovered. The Great Train Robbery became a symbol of audacity and criminal cunning, inspiring books, movies, and a lasting legacy in popular culture. The Banco Central Heist, 2005. The Banco Central Heist in Brazil, which took place in 2005, is one of the largest heists in history. A criminal gang managed to steal approximately $70 million from the central bank's vault in Fortaleza, Brazil. The heist was notable for the meticulous planning that went into it. The robbers spent months digging a tunnel from a rented house near the bank's premises, carefully avoiding detection by bank security systems. The tunnel led directly into the vault area, allowing them to steal the money undetected. The heist was carried out with military precision, and the robbers even took the time to cover their tracks by digging back into the tunnel and filling it in once they had completed the robbery. Although several members of the gang were arrested later, much of the stolen money was never recovered. The Banco Central heist remains one of the most daring and well-executed robberies in history. Tax havens and the ultra-wealthy. Tax havens are jurisdictions that offer low or zero tax rates, making them popular destinations for wealthy individuals and corporations seeking to minimize their tax liabilities. These havens typically feature financial secrecy laws that make it difficult for foreign governments to track or tax income and assets held within them. The world of finance is rife with stories of deception, fraud, and crime, from high-stakes scams like Enron and Madoff's Ponzi scheme to daring heists like the Great Train Robbery. These financial crimes have not only caused immense economic damage, but have also shaken public trust in the integrity of financial systems and institutions. Whether it's the allure of tax havens, the psychological appeal of Ponzi schemes, or the audacity of a well-executed heist, these events serve as stark reminders of the dangers that lurk in the darker corners of the financial world. As we move forward, it is essential to remain vigilant and hold individuals and organizations accountable to maintain trust in our financial systems.